Over the last couple of years, many agents kind of steered away from working with VA buyers only because with a low to zero down payment, low closing costs program, it was really difficult during this past market to get offers accepted under the VA loan program. Well, all of that's beginning to change as the market changes. So the VA program is becoming an option for real estate agents who want to focus on the niches of opportunity in this new real estate market. So I have Zach and Hannah with us from Veterans United. Veterans United is not only an incredible lead partner of Lair Realty, but also they do a phenomenal job at servicing and helping VA buyers. So we asked them to come on just to go through the basics, what we need to know about VA buyers. So as real estate agents, we can best service that clientele. So welcome to Zach and Hannah. Thanks guys for joining us today.
Thank you so much for
having me. I really appreciate the opportunity.
Yes, same here. Thank you so much for having us on today. I'm going to let Zach kind of take over the call and answer those questions that you have, but I'm certainly here as a level of support from Veterans United Realty too.
Okay, awesome. So Zach, first tell us basic overview of a VA loan. Who is eligible? So let's start there.
You know, it runs the gamut, Stacy, with time and service. You know, in general, most active duty borrowers will be eligible to use the loan. A great fail-safe is just refer clients to me directly. I can go, and what you do is you submit service documentation to the Department of Veterans Affairs. That process is automated now. So I would venture to say 3/4 of the time, with their social and year of birth, I can confirm eligibility on the phone. That's most of the time. In some situations, I'll have to do a full application in which I submit their service documents. But if they've served a bit of active duty time, they're generally going to be eligible. For guardsmen, reservists, it takes 6 years. But like, for example, folks that got activated due to COVID relief, like they're now eligible for the loan. So if they've been activated to active orders outside of training, those folks are generally eligible too. And like I said, I mean, I'll get everyone my contact information. If a client's ever unsure, it is definitely worth taking the 2 or 3 minutes, and I can just log on and check the status of their eligibility. In most cases, I can confirm it right there on the phone. In some situations, we do a full application in which I submit their service paperwork, and then I'll usually know within 2 or 3 days.
Okay, that was the next question I have for you, because basically to get the VA mortgage, the borrower needs a certificate of eligibility, correct?
Yes. So when I talked about certifying their eligibility over the phone, that's exactly right. I'm logging in to request a copy of their certificate of eligibility. So I've got to log in with the VA. We go on there, we check with their social and year of birth, and then the VA will confirm if they're eligible or not. And then again, in some situations, guys, it takes a little longer, couple of days. We submit their service documents, and then the VA will respond on their eligibility. And so if they issue the certificate of eligibility, then that means that veteran has served enough time and they're eligible to use the benefit.
Okay. And then let's just say they are eligible, but they don't have their certificate of eligibility. How long is that process? Like, does that hold up the loan?
Well, you've got to have a certificate of eligibility to close the loan, because that's, like you said earlier correctly, that's the VA's way of certifying the veteran's eligible to use the benefit. If someone calls in and I speak with them, I'll check to see if I can get their certificate right then. The majority of the times I can. In situations where the VA wants me to do a full application, then I'll walk the veteran through what documents I need, and then they'll send me those, and then I can certify their eligibility usually within a few days. sometimes you'll get folks that may have served plenty of time, but it was in the distant past, and so they don't have those documents readily available. I'm another good resource there because I can assist them in obtaining those documents. In these situations, it's a little bit of extra work, but the benefits of using the loan are strong. You know, it's worth their time to put in an extra day or two if they can go VA. You know, so use me as a resource. If the veteran wants to certify eligibility, I can do that in most cases right there. But in those trickier cases where they may not have the paperwork or they have to do a full application, I do these every single day. So I can assist someone in that situation.
Okay. So next question, beyond, as far as the eligibility goes, are there any red flags that an agent should watch out for that might mean, so for example, let's just say that the veteran is discharged, disabled, or also if you could touch on military spouses of veterans, how they can get veteran financing?
Yeah, so I would say it's just kind of a general rule to take forward. Err on the side of checking, you know, have me check to confirm the eligibility. There's a lot of situations where people are positive they're not going to be eligible, and it turns out they are. So it's always best just to see it to fruition and make sure, you know, yes or no, are they eligible or not? And the only way to do that is to request a certificate. But things that you know are good, as you put it, kind of red flags are, you know, someone's a National Guardsman or woman or reservist, and they've not done 6 years, and they've never been activated. The only active duty they have is like basic training. They likely will not be eligible. But those rules have changed recently. Like I said, a bunch of people got activated for COVID relief. They are now deemed to be eligible for the loan, you know, assuming they've done enough service. So in terms of military spouses, Stacy, if a spouse were to have passed due to service-connected causes, then in all likelihood, they will be eligible to use their deceased spouse's benefit. Now, if someone serves and just passes away due to natural causes, very likely that spouse will not be eligible to use the VA benefit. But if their spouse had died due to service-connected causes, then the surviving spouse should, in fact, be eligible to use the benefit. That process has also gotten easier over the years of how to ascertain their eligibility. And again, I would encourage folks, I'll get my contact info out at the end of the call. Just rely on me there. If I get their spouse's service documents, I can go and check the spouse's eligibility. And the VA, to their credit, has made that a lot easier. It used to be a more drawn out process to confirm surviving spouse eligibility, and they've really done a good job streamlining that.
Okay, next question. What happens if a veteran has used their VA eligibility in the past? Can they buy another house again?
Yeah, I'm really glad you asked this. Probably one of the most common misconceptions of the loan, and there's plenty of bad information on the web about this. Yes. If a veteran buys a house with their VA benefit, and let's say they sell the home free and clear, they have full entitlement to use the loan again. Now, I work with people every single month. In fact, I just talked to a gentleman in Washington State that I helped buy a home about 2 years ago, who's interested to now rent out that house and maybe downsize into a smaller home. You can, in fact, have more than one VA loan at the same time. It's what's called second tier entitlement. It gets a little more complicated because we're focused on the financials. Can the person qualify with 2 mortgages, you know, at the same time? But then in terms of the VA stipulations, the VA gives you maximum and minimum loan amounts when you buy on second tier entitlement. In these situations, the county in which they're purchasing starts to matter. and then they have a certain amount of VA entitlement used up on their first loan, which is confirmed on their certificate of eligibility. Not to go back to this, but again, rely on me. I work with folks buying on second tier entitlement every single month. So almost every month I have someone who owns a VA loan or has a VA home now that is going to buy another house with VA. And so I'm quite comfortable with these situations. And there's a lot of bad information about it. People frequently call and say, I know I can't use the benefit again because I've already used it or because I already have a house on a VA loan. And that's actually just not the case. If they have remaining second tier entitlement, which folks frequently do, they are in fact eligible to go ahead and use the loan a subsequent time, often while they still own that other home, still financed on VA.
One other point on that is, as a real estate agent, I would say as well not to try to read the certificate of eligibility because it gets confusing. The certificate of eligibility might say that they're eligible for a certain amount. That has nothing to do with the amount of mortgage that they can actually get, correct?
Yes, you're exactly right. Entitlement was set up decades ago, and they've not revised the process by which they do it. So it is complicated. I've been doing VA loans for 13 years now. It's still something that comes up where people get confused on, and I'm not surprised. You know, the way by which they calculate it is pretty complex. But yeah, I mean, at the end of the day, what I'm focused on in these situations is twofold. Do they have sufficient second tier entitlement to buy another house, or do they have to sell their home to restore all their entitlement? There's just no way to know unless you check, you know. So I encourage people, allow me to take the application, you know, take 5 minutes, and let's not guess at what you can or can't do. Let's actually check your certificate and check your financials and see what's really possible. The other side of that coin is just the financials. You know, maybe they have sufficient entitlement to buy another home, but maybe they can't qualify with 2 mortgage payments. Veterans United allows what's called a conversion of primary, where if a veteran owns a home, that's their primary residence, and they decide to keep that property and rent it to a non-family member, if they meet certain stipulations, I can actually offset that mortgage payment in its entirety. So we've got really good options for people that are, you know, veterans that are trying to go ahead and use the benefit a subsequent time while they still retain their old house as a rental. And then those are the kind of the 2 key questions. You know, can they financially qualify with 2 payments? If not, conversion of the primary to a rental is a good option. And then in terms of the Department of Veterans Affairs requirements, do they have sufficient entitlement to go ahead and buy another home on second tier? And for all the agents listening in here, in these situations, the county in which they're buying the new house really does make a difference, and it's helpful for me to know when I'm calculating their second tier entitlement. So, but it is absolutely possible, and in fact, it's frequent. You know, I help people, I would say every single month, who are retaining a VA loan, or retaining a home, I should say, that's financed on a VA loan, and then going out and buying another home on a VA loan, having 2 VA loans at the same time.
Gotcha. Okay, what about a VA buyer with regards to multifamily or condo or new construction? Any of those they should stay away from?
No, a really good question. Condominiums require specific VA approval for the veteran to proceed on them. But again, I really credit the VA. They've made some really positive changes in my tenure of this job that have made, it's made it easier. The program is designed to allow a veteran and their family to buy a primary home. You know, it's not for investment properties, but if they plan to live in it for 1 year as the primary, their mission is to try to make attaining that home ownership easier. So in regards to condos, again, if you know the name of the complex, lean on me, give me a call, and I can go check and see if the condo is VA approved. If it is not, I have a very simple list of about 11 items that we can request from the HOA. And the VA, a decade ago, you used to mail this paperwork in and pray that you'd get a response, within 3 months. Now they do it all electronically, and I can submit an application to have the condo approved. Usually within a week, I'll hear back. They are more lenient, I believe, to approve the condos than they've ever been. And they also now, if for some reason a condo could not get approved for one reason or another, the veteran can write a letter stating they understand the reason why the condo was not approved by VA, and they can request a one-time waiver for them to go ahead and buy the condo. And this is newer, but from what I've seen, they're also quite liberal to approve these. So if a veteran would like to buy a condo that the VA refuses to approve for one reason or another, there's still an avenue for that veteran to move forward and buy that condo. They basically write a letter acknowledging that they understand the reason it was not approved and that they would still like to proceed and buy it and request a waiver for them to use it. So it wouldn't allow future veterans to buy a condo from that complex, but it would allow our veteran in this situation to go ahead and proceed on an exception. All of this is much faster, can be done in a matter of, let's say, maybe 2 weeks. If the paperwork is together, I can submit an application same day. Usually within a week, we would hear. If it was approved, they could proceed. If it was not approved, we could request a waiver. So new construction, if the builder is the one building the home, it's really just like any old VA loan. The veteran can have the home appraised and purchase the property very easily. In situations where maybe the veteran owns the land or the builder is asking the veteran to finance the building of the house, then I would encourage them. It's what's called a construction to perm loan. And it's more like a refinance in essence. They would go to one of your local lenders and get a construction loan. And then when the property is 90% complete, we could have it appraised and then attempt to refinance all of it into a fixed rate VA loan. It's a bit more complicated and a bit riskier to the client because they, in essence, are taking the construction loan. But that can be done. It can all get refinanced at completion. If the builder is the one that is financing the build and the builder owns the land, it works much like any old VA loan. We just have the home appraised and they buy it when it's complete. Back to the condo question, I should note, townhomes do not require specific VA approval. It's treated just like a single family house. So if it's on list with the county or township as a townhome, then it does not need VA approval. It just has to get an appraisal like any other house. Multi-units up to 4 units are eligible. So there's no special stipulations there. So if a borrower wants to buy a duplex, let's say, or a triplex, as long as they intend to live in one of the units as their primary home, they can in fact proceed and buy up to a 4-unit house on a VA loan.
On a VA loan, it's a little bit different. So first of all, it's a 0 down payment. Can you talk about the funding fee? So there's no monthly mortgage insurance, I don't think, like any other mortgage that would have 0 or a low down payment, but there is a VA funding fee. Can you talk about what that is and that just gets rolled into the mortgage, correct?
Yep, Stacy, you're exactly right. And I mean, you kind of beat me to the punch. I think just for all the folks on the call that are meeting with clients and maybe having an understanding of why the loan is so advantageous if you're in the customer's shoes, I think is important. And I mean, you nailed it. There's no down payment requirement with the VA loan. In most instances, sometimes when we get into second tier entitlement, which we touched on earlier, there can be a down payment needed, but I would venture to say most clients you're working with that don't own some other house on VA, generally they're going to be able to buy the home with no money down. I mean, that's like over $1 million. You can finance $1 million home VA and you're not required to make a down payment. So the other big point you made, Stacy, is you're right. There's no PMI. So obviously conventional products, unless you put 20% down, you're going to have to pay PMI. With changes to FHA now, frequently there's going to be a mortgage insurance, right? So VA is really unique in that sense that there's truly no private mortgage insurance. And in almost all cases, the veteran is not required to make a down payment. As I said, there are a couple unique situations there on second tier entitlement where maybe a down payment's needed, but the vast majority of the folks I work with do not have to make a down payment. And there's never any PMI on the loan in any circumstance. Now, the funding fee, Stacy, you're correct. Folks who have a 10% or greater service-connected disability are waived from paying any funding fee. So if they get a service-connected disability, they do not pay a VA funding fee. It's zero. For folks that have no service-connected disability, they do pay a VA funding fee. And Stacy, you're correct. It's rolled into the loan. The home does not need to appraise higher to cover this additional amount. It's automatically built into the mortgage. And essentially what this is it's the fee that allows the VA to administer the program. You know, it's how the VA housing program keeps the lights on. You know, when I call in for certificate of eligibility requests, we're trying to get condo approvals, right? The VA staffs regional loan centers throughout the country with people that administer the program. So this is how their offices are kept open. That's how these folks' salaries get paid. So as a first-time user, it's a smaller amount. When you use the loan a subsequent time, the funding fee goes up. But it's financed outright, so it's already included in the mortgage. And again, the home does not need to appraise to cover this additional funding fee. It's, you know, so if it was a $100,000 deal and the veteran is paying a 2.6% funding fee, it's not like the home has to appraise for 1026. It just needs to appraise for 100. They allow their fee to be tacked on top.
And does
the
VA program still have like the VA Streamline refinance since interest rates are a little higher now?
Yes, and that was another thing I was hoping we would discuss, because it's another major benefit of using a VA loan and using Veterans United. The VA offers what's called the Streamline refinance, not to take cash out. It's not to consolidate debt. It's literally just to allow someone who is going to stay in their home to get onto a better, lower interest rate when market rates have improved. You can only do a Streamline once you're already on a VA loan. So if you're on a conventional loan and you're an eligible veteran, you cannot do a VA Streamline. You have to already have a VA loan. But, you know, for your folks that you may be encouraging to check out VA now, to buy a house on VA, I should note VA rates are competitive. I think historically, often even better than conventional rates. But, you know, rates are higher today. So if someone proceeds and, you know, gets a market rate today, and I think we're all hoping rates improve in the future. You know, if rates are lower in a year, that veteran will very likely be eligible to do a Streamline. Some highlights of the Streamline program: the funding fee is much reduced. Again, if you have a service-connected disability, it's zero. If you do not have a service-connected disability, for a Streamline, it's only 0.5%. So they make the funding fee low. My company is extremely good at offering really attractive terms to do a Streamline if it benefits the customer. So we frequently cover the fees for the veteran to do their Streamline. We've had different programs over the years, but we generally cover some or all of the fees associated with them doing their Streamline, you know, to keep the client within our portfolio. The VA also makes it fairly easy. They don't have to get a traditional appraisal on the home. The logic is sound. You know, the VA's focused on the veteran's ability to repay the loan. So they figure if a family has been making a payment at 6.5, let's say, for the last 2 years, and now they could get a 5% interest rate. If they still have income, they've had no late payments on the home, they really make it quite simple to get onto the lower rate because they figure it actually makes their ability to repay the mortgage stronger. So it's kind of common sense underwriting with the Streamline. The most recent campaigns was that if the veteran still had some sort of income and they had no late payments within the last 12 months, there was not a whole lot of hoop jumping to get into the new lower rate. So they're very, beyond being really advantageous for the client, you know, they also make them really easy to take advantage of. Like I said, the underwriting process is streamlined. They don't have to get a full-on appraisal. VA has a few thresholds. They've got to save 0.5% or more. They have to save at least $50 a month, and they have to recoup any and all costs of the loan within 36 months or less. And they deem those as net tangible benefits. You know, so they say if the veteran has a net tangible benefit from doing a Streamline, then, you know, they make the process very easy to take advantage of. So my company's been excellent over the last decade. When clients are eligible for a Streamline, we have technology that identifies those customers, routes their names to the previous loan officer and says, hey, why don't you give, you know, John Smith a call? If he's going to stay in the house, it's probably a sensible time for him to Streamline. So it's a really good selling point of the loan. If they buy a house today at a market rate, if rates continue to go up, they'll probably stay right where they are and be happy they bought when they did. If rates were to improve dramatically, they're not stuck in this rate in perpetuity. You know, Streamline is a good option if rates improve down the road.
Gotcha. For real estate agents listening to this today, first of all, the veterans program is the VA mortgage is a 0 down payment mortgage. I do want to point out that typically you still need some sort of deposit on the property. So don't get the down payment confused with the deposit on the purchase and sale agreement. Typically they still need the deposit. So that's just something you have to explain to the veteran when you're working with them. Zach, can you just talk briefly about like what do closing costs look like? So your veteran gets no money down, but they're still going to need some money. What do closing costs look like?
Yeah, I'm glad you asked that, Stacy, because that also gets confused frequently with clients who, you know, maybe never bought a home before, or maybe their agent, it's their first, you know, rodeo with a VA loan. So the no down payment verbiage creates some confusion, but it's just that. There's no down payment requirement and there's no PMI, but there are still standard closing costs on the loan. If any of you folks on the call are considering, you know, writing an offer VA for someone, you know, give me a ring and I will go check the county and try to give you an estimate. But, you know, basically you've got standard closing costs from the lender and the title company. And then they also will escrow prepaids. So tax and insurance, you know, it varies a lot depending on where you are because tax amounts and insurance amounts vary so much. I want to say probably 2.5% to 3.5% is probably safe for most of the country. You know, some places like New York, I'm not licensed there any longer. It's more expensive to use a VA loan because the taxes are so high. But that's a great point, Stacy. The no money down does not mean no closing costs. You know, the veteran still would have closing costs. Those can be negotiated to be paid for by the seller. So that is definitely doable on this loan like any other. And I would say even common. The veteran can get a gift from a family member. They could pay them out of pocket, but you know, many of my buyers, their agent will work with them to try to get a seller concession. And as you pointed out, you know, earnest money is still pretty standard. It's not required by the VA, but aside from transactions where people are buying from family, there's earnest money on most every single loan that I assist people with. So it's, in terms of earnest money and closing costs, guys, it's not all that different from a conventional loan. The big differences are they don't have to put 20% down. And even if they put $0 down, they have no PMI with the loan. And that's like, I pre-approved a gentleman in Virginia today for $1.5 million. He's not planning to do a down payment. He will have no PMI.
Whoops, did we lose Zach? We'll wait a second and see if Zach can get logged back on. Hannah, do you know if on the VA mortgage, can the seller pay prepaids? I know they can pay the closing costs. Is it prepaids too?
That will definitely be a question for Zach to answer.
Okay.
I just wanted to add in as well. I will make sure that Gentry sends out all of Zach's information. I know that it's up on the screen today, but I'll certainly make sure that she gets an email over to Stacy, and Stacy can push everything out to everybody that's on this call today so that you guys can easily, contact Zach at any time with any questions that do come up. I know Zach will be more than happy to answer those, moving forward too.
So a couple things I wanted our agents to know. So Veterans United is also a big partner when it comes to generating business for their agents. One thing that I will say is that when you refer in business to Veterans United, they tag it to you as the real estate agent. So you don't have to worry that somebody else is going to get the lead because you referred something into Veterans United. They're very diligent about tracking where the business comes from so that it stays with the agent who has referred the business in. And then last, I just wanted to encourage real estate agents. We talked about in our last sales meeting that with the new changing real estate market, this opens up a lot of opportunities for real estate agents, and you have to recognize what the opportunities are. One of the big opportunities is veteran loans, VA buyers. Like I said, in the last 2 years, it was not very easy to get an offer accepted under the VA loan program. Under the new market, it's much easier to get an offer accepted because houses are not getting 20 offers. So, and in general, the reason I wanted to show this contact information for Zach is that if you go to Zillow, he's got like 1,200 reviews. He's a 5-star loan officer with Veterans United with 1,200 reviews. That means he's done more than 1,200 VA mortgages. So that's super impressive. And when it comes to your real estate business, if you're working with a veteran buyer, you want to work with a loan officer who really understands the ins and outs of the program. Because one of the things I've seen is that real estate agents, if they're not working with the right loan officer and the loan officer doesn't understand how the VA program works, it is a different type of mortgage than any of the other mortgage programs. So you need to work with a lender who understands exactly what the nuances of the program are so that you can best serve your client. All right, it looks like that Zach may not be able to get on. We're lucky that we got him because we had some issues, technical issues with him logging on and using video and stuff, but I think we got the meat out of what we wanted to cover today. I want you guys as real estate agents to look for opportunities. I did mortgages 20 plus years ago, and I loved the veterans, the VA mortgage program. And one of the ways I built my mortgage business 20 plus years ago was by going out and doing VA seminars. So getting out to, you can do them at a hotel, you can do them at your office. Veterans United will send along some great information on what to talk about, things like that. But it's an awesome opportunity to get out there and educate our veterans. They're everywhere, and utilize this awesome product. So with that, I want to thank you. Yeah, you made it back.
Oh, Yeah, I'm sorry. I've been here. I didn't want to interrupt you. I don't know what happened. I could still hear you guys, but I don't think you could hear me. So I logged on as Hannah again. Sorry, Hannah.
Oh, I just had a couple of quick questions for you. One, if an agent is asking for seller concession to pay for closing costs, can the seller also pay prepaids?
Yes, they can. There's a cap of 4% on concessions, which would apply to prepaids, but I don't want to mix this up with closing costs. There's no cap on closing costs. So a seller could give 6% for closing costs. There's no cap on how big of a concession they can give for closing costs. For stuff like prepaid concessions, which would be prepaid items, are capped at 4%. So on pretty much every deal most of you guys will be working on, you should, if assuming you can negotiate it, the seller can pay all the closing costs and the prepaid items in almost every situation.
Okay, and one other question I have for you is sometimes like government loans, there's like little nuances, like you have to do a pest inspection, or if there's peeling paint, you better scrape it and get rid of the peeling paint before getting the appraiser in. Are there any weird little nuances with the VA program? Whoop. Did we lose them again?
Can you hear me, Stacy?
Oh, yep. I can hear you
Sorry,
again.
I don't know what's going on. You know, I would say for all the agents listening in, I would let common sense dictate how you proceed here. If the home is in generally decent move-in ready condition, it will probably pass the VA appraisal just fine. If the home needs $50,000 of work to be habitable, it very well may not pass VA financing without a bunch of repairs getting done. So, you know, peeling paint can get brought up on an appraisal, sure. Handrails, you know, there can be little repairs required. But back to the kind of guiding principle, the VA is not trying to prevent veterans from using the program. So, I mean, if the home is in move-in ready, decent condition, it will probably work just fine. I would also say for any folks considering referring clients my way, if a veteran proceeds on a property and it cannot pass appraisal, I've made it standard personal practice to pay for their subsequent appraisal. So if they attempt a home and it can't work due to the appraisal, I will gladly pay their subsequent appraisal fee, you know, so they're not out two appraisals on one house.
Gotcha. And by the way, on FHA, that's almost impossible to do because once that FHA case number is assigned, there's no second appraisal that will happen.
Yeah, with VA, if the appraiser says, hey, there's chipping paint here, or there's a window broken, or, you know, what have you, whatever repair they may list, the way the process would work is the repair, you know, hopefully we go to the seller, they agree to make the repair, and then the appraiser comes back out and re-inspects the property. As technology's gotten better for what are deemed more minor repairs like chipping paint, frequently a picture from the agent will work. We can take a photo of the repair, send it to the appraiser, and they can sign off on it. So,
Gotcha.
you know, little repairs are not the end of the world. And if the home is in overall decent condition, you know, it should be able to go VA just fine.
Awesome. And then I'll let you reiterate it, but I wanted to let our agents know because we are Veterans United is an amazing partner for Lair. We have many agents that are part of your referral program, but for agents that refer in business because they want to work with a loan officer who has 1,200 reviews on working with VA clients, you guys are really good about tracking and making sure that loan stays with that agent. It's not going to end up getting referred out to somebody else.
Oh yeah. I mean, if you refer, the best practice for referral to you guys, I mean, having a good customer service review when you work as an online lender is really important, and we take that quite seriously. I want customers and my agents to be happy with having worked with me at the end. It's the best long-term strategy for, doing more business with people. So, and it's just the right thing to do. So if you ever would like to refer a customer to me, the best way to do it is to contact me directly. Our website is very, very good at basically getting people to fill out a lead, and then they get called usually within 2 minutes. Most loan officers here are excellent. So if that were to happen, I would say any loan officer that they worked with would probably be really good, but likely they wouldn't work with me. One of hundreds of loan officers might call them. If you refer a client directly to me, they are treated as a referral for one, so they get some special perks as being referred to us. If they go through the website, they are not treated like a referral. And if you refer them directly to me, you can be assured they will work directly with me, not with the first loan officer that calls and contacts the customer. To your question, Stacy, yeah, if you were to refer someone to me, it is not standard practice to take them and try to pair them with a different agent. So that would not happen. I would mark them as a referral from you, for example. Then your name would be attached to that customer, and then you would be representing them as their agent. So no, I do not take referrals from an agent partner and then turn around and try to pair them with a different agent. If the client goes and gets a different agent on their own or what have you, obviously things can happen like that. But generally speaking, if they're working with you, you've referred them to me, we're going to see that transaction through together and help that, client buy a house. So no, I do not refer them to a different agent if they've been referred to me by an agent.
All right, awesome stuff. Where can our agents get some resources if they want to do like a VA buyer seminar, or just to give out to clients to educate them on the process?
Our website is a great wealth of information. Hannah as well may be able to provide, more detailed literature or handouts. So Hannah will be a good resource there. And then I would people can always contact me. Stacy, are you disseminating my phone number and email to this group?
Yeah, so it's already on the screen for anybody watching it now, but for anybody watching, we'll send out a bunch of information, like contact information, things like that, so that if you want to reach out to Zach or Hannah, you'll have their info.
I really appreciate that very much. Referrals are the lifeblood of our business, and I treat referrals like gold. So if anyone here is comfortable to refer me a client, I will usually attempt to call them multiple times that same day and get their application. I always follow back up with the agent to let them know the status of the application. If I am able to pre-qualify them, I will do it same day. Our process is all electronic. I frequently can pre-approve people same day of application. So, please do keep me in mind. And I would encourage folks to get in the habit of, when you're meeting with a new home buyer, you may just ask them if they've served. What I've found, my father's an example of this. He was in the military during the Vietnam era, and him and my mother have bought numerous homes together. Until I started doing this work, he didn't know anything about a VA loan. He's a pretty, sophisticated guy. It's just the marketing for the program, it could be better. So there are frequently veterans who are eligible to use the benefit. They may have even bought a couple homes in their past, and they don't know anything about VA financing. They don't know the perks, the no PMI, the no down payment. So I would just make it a habit when you meet with a new buyer just to ask them if they served. If they served and they're going to do a 5% down conventional or 3.5% down FHA product that's going to require PMI, asking them that question, you could really potentially direct them to a much better loan product that they very well may not be aware of at all. So, hopefully you guys are getting VA buyers coming to you that know they want to go VA right off the bat, and that's great. But I would assume a lot of folks you meet with now are VA eligible and they're not aware of their own benefit. So it's good just to ask. And if people would like to know more or confirm if they're eligible, please consider me a resource.
All right, awesome. And Zach, somebody just asked a question about assumability. Is that something easy to execute on a VA assumption?
We do not actually do VA assumable loans. You see them sometimes with family members. Mom and dad got a house at a really good rate and their son or daughter wants to assume that mortgage. So it is something the VA program affords, but we don't actually do loan assumptions.
Gotcha. Okay, awesome stuff, Zach. Hannah, thank you so much for your time today and all that information that our agents can take and turn it into new business. Thank you.
Oh, yeah. I'm very grateful to you all. Thank you so much for your time. I appreciate it, Stacy.
All right. Have a great day, everyone.